Good morning and Happy New Year, everybody. This is Mike. I appreciate being on the call today. This is a Monday morning call. If there are things that you'd like to discuss, be sure to put those into the chat box, and we will cover those. Got questions, concerns, things gone well, things gone poorly, questions about what's going on for 2013, whatever. That's time to do that. If you got questions, other people will have those questions too. So, with that said, I'll go through a couple of pointers I want to go through today, and then we'll wait to see if anybody has questions or concerns they want to go through. So, first thing from Money Magazine, they were talking to the Vanguard's chief investment officer, who's in charge of $1.9 trillion, $1.9 trillion of money. So I would assume this guy has some insight. Would you agree to that? So this is from the December 12th, page 85 on Money Magazine. He came out and said, we're going to be seeing extremely low returns for bonds going forward, and people are going to actually see negative returns as interest rates rise on their bond funds. So why do you think I'm bringing that up, guys? Where have most people been putting their money for the last 3 or 4 years? Even though the stock market is doing well, where have been what's had more money? Glenn says money market, bonds. Bill says bills. Yeah, actually, I would agree with both those, money market and bonds. More importantly, we've seen tons of money go into the bond market, and they're just not safe. But people have done this in the last 20 years almost, I think 3 different times where they pulled money out of the stock market at the very worst time and put it into the bond market at the very worst time, and then put it back into the stock market at the very worst time and pull it out of the bond market at the very worst time. So if you should be seeing lots of people with lots of money in bonds, and this is a great indication of why, validation of why people need to move out of bonds into something more safe and stable. So, and people think Money Magazine is the Bible of investing. So it's a great article for you guys to have in your back pocket. The other thing is, I saw this in the Financial Advisor magazine in the November issue, and I just thought it was a great little story to illustrate why the sale or what we bucket type investing makes so much sense. It says, to illustrate his point, Parker tells the cautionary tale about an acquaintance who retired with $1.7 million in 2007. 5 years later, only $750,000 was left. All the assets fell when the market dropped, and the money kept coming out of those depressed assets. So this guy was taking incomes out of his accounts. If the account had been set up initially in a way where the first 5 years were in some type of fixed account and the other assets were allowed to fluctuate, it would have contained the downside risk, and it would have had a much better chance to recover. So that's about as good an explanation of why the bucket strategy works as I've ever seen. So I just ran across that and thought that you guys also could have that in your back pocket as well. So those are the 2 little pointers that I had. And what I want to talk about today is we're going to do a tape review. So you can hear what this guy's done well and what he could have done better. But the main gist of this tape review is don't tell, sell, preach, or teach. But guess what advisors are excellent at doing? Telling, selling, preaching, and teaching. Now especially, this is at the first meeting. So should we be doing any telling, selling, preaching, or teaching at the first meeting, guys? We should never do it, but should we certainly, what is the first meeting? Eric says no, exactly right. Bill says no. What is the first meeting designed to do, guys? It's a data gathering. So if it's a data gathering, should we be telling at a data gathering? Should we be selling at a data gathering? Should we be preaching or teaching to them at a data gathering? Eric, you hit it on the head, right? See if they like us and if we can work with them. And so here's the thing. I'm not going to be doing any of these things at that point, at the first meeting. I'm just gathering data. But you're going to see what this guy wants to do is what I've seen advisors over and over and over do, which is try to convince the client at the first meeting that they're really smart. Try to convince the client at the first meeting that they have all the answers. And you can't do that at the first meeting. See, what's the dangers of attacking their situation or their advisor at the first meeting, guys? What's the danger of that? Yeah, they're going to defend him, Casey. I totally agree with you. They're going to defend him. Here's the thing, guys. If I'm a small guy and I'm going up against a big guy in a fight, Do I want to poke him? Do I want to pinch him? Do I want to slap him? Or do I want to get, or will I wait to attack him until I can just bring him down, no questions asked? I'll wait till he's not looking and then cold cock him, right? That's what I'm going to do if I'm a small guy going up against a big guy. Now, when we're at that first meeting, are we the small guy or are we the big guy if they already have an advisor? Who's got the upper hand? The current advisor has the, we're the small guy, right, Bill? The current advisor has the upper hand by a lot. Possession is 9/10 of the law. And remember, they do not want to move from their current advisor. They came in just to simply to get some questions answered and to get patted on the back. They have no intention of leaving their current guy. And I've said this before, but I'll say it again. If you're married and you have a mistress, if you love your mistress and you love your wife, what are you going to do? You're going to stay with your wife. If you just like your wife but love your mistress, even though you love your mistress and only like your wife, most guys will still stay with their wife. Why? Because of the hassle of getting a divorce. Because of the confrontation of getting a divorce. The only way they're going to leave their current guy is if they, or their wife, is if they don't like their wife and they love their mistress. But you really think in the first meeting we're going to be able to accomplish that, to make them not like their advisor and to love us in the first meeting? No, it takes a disclosure meeting to do that. It takes going through the 18 different things we go through to get that to happen. Because if all we do is show them that they're doing one thing wrong, they're going to chalk that up to a mistake. If we show them 3 things wrong, they're going to chalk those up to a mistake. It takes starting out slow, which we do, right? We start out with things that maybe disappoint them. Then we get into things that irritate them until we finally get into things that make them angry. You cannot do that in a 1-hour data gathering. Because remember, between everything else that you've done, you will only have, between gathering the data and asking some questions on that, I mean, doing all the things you do to gather data, you're not going to have much time left over to do, to get them angry at what they currently have. So you need the full hour and a half of that disclosure meeting to have them walk through this thing emotionally where they can become convinced that their guy is screwing them on purpose, okay? So it's like the old frog in the hot water. If you throw a frog into boiling water, he's going to jump out. Instead, you got to put him into cool water and turn it up, and he'll stay in there till he's cooked. And I think it was Casey said earlier, yeah, they're going to defend themselves. And when I say defend themselves, that's exactly what I mean, because if you attack their guy, are they really defending their guy or are they defending themselves? They're defending themselves. Their decision-making process, their ability to find good quality advisors, their ability to have good judgment of character. So if you attack their guys, their knee-jerk reaction is going to be to defend him. Unless you put him in the pot and turn up the heat slowly. And that's what we're able to do at the disclosure meeting, but not at the first meeting. But over and over, I see guys who want to, again, we think we're going to get clients by showing them that we're smart, by pointing out their problems. You can't do that at the first meeting. See, here's a little comic where it says, hey, the teacher says, what's this little tiny speck in the middle of the page? And the guy says, well, that's my assignment. I draw small. Well, yeah, I grade small. You get an F. See, the point is, guys, with this cartoon is we are not going to be grading people at this first meeting. If you grade people at the first meeting, they are going to start to defend themselves. So let's start to listen to what this. So what we're at is this guy's about half. He's through gathering the information about the CPA and attorney and such, but now he's gathering data about the investments. So what if the prospect has no advisor and are looking at us? Well, that's the same thing, guys. What if the prospect has no advisor? What is the first meeting designed to do? Should we be bringing up their advisor at the first meeting, guys? Should we be bringing up their, no. Okay, everybody's saying no. We don't even bring up their advisor at the first meeting. And it's, Bill, if your question is what about the, if the prospect has no advisor at the disclosure meeting, so let's see if somebody knows. I mean, Casey, you should know the answer to this. Eric, you should know the answer to this. So if they don't have an advisor, how does that change the disclosure meeting? Not a bit, Eric says. You're exactly right, Eric. Not a bit. So then when you say not a bit, then who are we going to have them discover is not on their side then, Eric? Because you're right, not a bit. It's not going to change the meeting a bit. No, not themselves. Will people ever attack themselves, guys? People will never attack the companies they work with, Casey. Exactly right. So they're obviously not doing this by themselves. They either have a Charles Schwab account, or they have a Vanguard account, or they have a whatever account. All you do is substitute all of the things that we do with the individual advisor with the company. So if I'm going through the beneficiaries with them, I'll say, instead of saying, you know, did your guy cover this with you, I'm going to say, did Vanguard cover this with you? They still have to work with somebody who's handling their money, so you just change the individual advisor. The company becomes that advisor. Eric says, makes more sense. Okay, so this is where he's gathering data now. At the first meeting, he's gathering data about the investments. So should he be talking about or giving opinions on the investments then? At the first meeting, as he's gathering data about the investments, should he be giving opinions on it? Never, Eric says. Exactly. No, okay, exactly. No. His job is simply to gather information. What if the client tries to get you to give them information? And they'll even do this. The clients will even do this. They'll say, yeah, well, I really don't like this mutual fund, and it's, you know, I think the guy got me into a bad bum investment here. Should you get on board with that when the client's doing that? No, Casey. Casey, why not? Why shouldn't you? You're right. Why shouldn't you? See, guys, the thing is, this client is casting out there. He's trying to see if you're just another salesman or not. So when you cast it out there and you start to go, he starts reeling it in to see if you take the bait. And if you take the bait and start slamming, you know, jump on board and start slamming the thing he was slamming, he knows you're just a salesperson. He's throwing that out there to see if you're going to just be like every other salesperson who's going to jump on and tell him how horrible everything is. Instead, what you need to do is just say, oh, well, you know, we certainly want to take a look at that. That's all, and move on. That's it. No opinions. No opinions whatsoever. So let's listen to this advisor, and let's hear if he's giving opinions or if he's telling, selling, preaching, and teaching at this first meeting. So here we go. So first of all, I'm going to just play about 5 seconds to make sure you can all hear it.
I'd like to give it away for half what the original fees were with the mutual funds.
I'm sorry, I was distracted there.
So could you all hear that?
Yep.
Okay, good.
Got quite a few.
Here we go. Okay, so you can hear the guys talking about his. They're talking about his mutual funds and other investments. So here we go.
I'm sorry, 1%, and is it 0.5%?
The mutual funds I think were like more like 2% or 2.5%, and it's more like half of that now.
So we're down to the ETFs. Okay, so Gainwraps is charging 1%.
Yeah.
And funds that we're using are about 1%.
Yeah, they're probably about 1% now.
Okay.
Maybe a little bit higher.
And you know about the fees that's here, right? What have you calculated them out to be?
On the
Variable annuity.
yeah. It's been so long since I looked at this stuff now. I think that was, because there is, I think that was about 3%.
I couldn't agree with you more. I'm glad you said 3% because I was going to say the average variable annuity, when you factor in everything, is at least 3%.
Yeah. Yeah, I think it was about.
Some are more, some are less.
3.25, something.
First of all, guys, should you be talking about fees at the first meeting? Eric, everybody's saying no. Why should you not be? You're right. You should not be talking about fees at the first meeting. Why not? Everybody's saying right. Exactly. Everybody's right. No, 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 no. Because if you start talking, it's too soon, Bill. You're right. It's an agreement meeting. If you start talking about fees, what's the guy going to start to do? Get defensive. Yep, and you're right, Eric. Defend. Everybody's saying defend. And guess what we're going to hear this guy start to do magically? The fees are to be discussed at the disclosure meeting, not at the agreement meeting. So watch what happens as he starts to go into these fees then.
Okay, I think it was.
In your opinion, what is the advantage of having that at this juncture?
At this juncture, I don't like it at all.
Okay.
But
what was the
I'm
advantage
probably going to stick it out for a couple more years.
Okay. What was the advantage of having it at that time?
Well, initially.
Do you hear what he said? What do you think about these fees? Well, I don't like them at all, but I'm going to stick it out for a couple years. So now this guy's doing what? Just like you said he was going to do, he's defending. He's actually laying down the law saying, I know you're going to try to tell me the fees are bad, but just so you know, Mr. Advisor, I ain't making any changes for 2 years. Perfect. That's exactly where we want to be at an agreement meeting, isn't it? So here we go.
Actually, they talked me into it because I was retiring. So I changed all my investments. I was kind of hoping that I wouldn't have to actually work on this stuff. I could just like sit the umbrella.
So what's this guy sound like now? Or what's this guy doing now? Because the advisor put him on his heels, made him look stupid, what's the guy doing? Well, I agree, Casey, defending his position. I mean, what he's doing is saying, well, here's the thing, I thought this was going to happen. He's got him on his heels. So now he's saying, hey, I'm not really stupid. Here's the circumstances that happened. Rationalizing, Rick, you're right. Do we want to make a client ever, ever, ever look stupid? No. But see, we say, but when I coach this guy, guess what he said? Mike, I wasn't making him look stupid. I was just what? Trying to help him. Trying to teach him. No. He's making him look stupid, and the guy's defending himself because of it. So here we go.
Drinks and
you were like on the margaritas on the beach. And
yeah, that's where I was.
Points of call and looking at your wine collection and taking inventory, those kinds of things.
Yeah, I'm not doing that anymore. So anyhow, and they said, well, we got a great investment. We got this variable annuity, and I did talk to another guy at the time that had a fixed annuity. It was a variation where this one provided a guaranteed income. The other one with a possibility of ratcheting it up. The other one.
Is that what did that attract you to that?
Yeah, that was because I wasn't anticipating the market to go down by 50%. Mm-hmm. That's what killed me. The market continued to be fairly stable, this would have been okay probably. But then the next day after I bought it, the market goes down to 50%,
right.
And then I'm screwed because now I've got half the money I started with. I'm still getting that guaranteed income, which is fine, but I was kind of hoping to ratchet that guaranteed income up over time.
Right. So you haven't started the income on this yet?
Yes, I did.
Oh, you have?
I did this year.
How much?
Last year.
How much are you taking on that?
$14,750 a year.
14,000 what?
$750
per year.
About 6%.
6% per year. Okay.
I
mean, yeah.
Yeah. So. Yeah, because I decided I was going to let it go for a little longer, but then I figured, I'll never if I can't get that investment back up to $250,000 or higher, I'll never get my money back, really, because if I don't start drawing, because it takes 20 years to get it back.
Well, and the thing is,
but it got jacked up by 6% per year, or the base got jacked up by 6% a year by not drawing out. So now after 3 years.
So now you're taking income.
I decided
6% of 200. Yeah, roughly.
Used to be 5%, and now it's jacked up to 6%.
Okay. Well, it sounds okay.
So over the next year or two, if I can get it back up to 250,000.
Okay. Well, here's what you have to do. That's fine if you do that.
Yeah, then I can start ratcheting.
But you have to get the 6% back on the investment, right?
Yeah.
So now what is he doing, the advisor? Teaching, right, Eric? And how do you let's predict here? How do you think the guy's going to react to this helping him and teaching him, positively or negatively or defensively?
because you're taking into account that, there's two accounts. One is the actual investment, the other one is your income base.
Right.
So you have to, sounds like to me they have to.
I have to get the original investment up.
Plus, you have to factor in the 6% you're taking out, because that counts.
Well, yeah.
And plus, you've got to factor in 3% that you're up.
Yeah.
So the chances good or bad, you're going to get it back up.
Well, I don't know. It was down as low as 100.
What's he doing? What's the client doing at this point? Because the advisor again thinks he's helping him, but how do you feel hearing what that advisor is doing? Does it really feel, if you're on the receiving end of that, does that seem like somebody who's interested in helping you, or does that seem like a parent telling you why you coming in late on Saturday night is a bad thing to do? Yeah, I would be uncomfortable. I would agree, Gal. I would be very uncomfortable. And yeah, it just sounds like a parent, Casey. So here we go.
50,000 now is up above. Well, I think it was, like I said, 211 or something.
Yeah, but you're still.
It's still a ways down.
You're still 20% below where you started.
Yeah, I got to get up to 290 or something before I actually.
So you have to
ratchet it up.
Right, you have to battle your withdrawals plus fees, and then you got to get back to it. It's pretty steep hill to climb that. Okay, cash flow. It seems like you're doing well. Just
and be careful of your ticks. The way how did it sound? I said, well, okay. How did that sound? Condescending, crass. I agree. Be careful of your ticks. And we all have little ticks that we don't even realize that we do until we listen to them on tape. That's why it's so important to tape your meetings. Because this guy had no clue that he sounded like that. So, and even when I had him listen to it, he argued with me. No, I don't understand why you're making such a big deal of that. Okay, it sounded crass is the exact word I would say.
Tell me, you got a good cash flow?
Yeah, it's reasonable.
End of the month, you have money in the account, or you got to draw it?
No, I don't have to draw it. Actually, it's only because of the car now that I'm drawing extra.
Cash flow's good.
Yeah, I mean, when a condo's empty, I mean, what I did is I have at the Boeing Credit Union, I have a home equity loan that I don't really draw on, but in case I need cash and I don't have it.
Boeing HELOC, how much is that for? How much do you have?
100,000.
And you haven't dipped into it at all?
No. Well, yeah, early on I did, but recently I haven't.
Okay.
As a matter of fact, I just recently redid it as a fixed 4.49% loan.
Okay.
Be variable.
Okay, now.
Can I ask you guys a question too? So we've been listening to this for 6 minutes. How many times has he gotten on this client's side? None, exactly, Eric. Zippo. How many times could he have gotten on his side? Many, 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 many times. So we've all counted how many times he's argued with them. I'm sorry, not argued with him. How many times he's taught him, which we all agree made the client feel defensive. So in 6 minutes, he's done that a dozen times, and yet not once has he gotten on this guy's side. What's the likelihood that this guy wants to work with the advisor during the 6 minutes of the meeting? Going up or spiraling downwards quickly? I wouldn't want to work with this guy. He's making me feel like an idiot. And we all want to work with people who make us feel like idiots or people who make us feel good. Yeah, I agree, Glenn. It's like flushing a toilet, exactly. I mean, but again, guess what this advisor told me at the end of the meeting? That this guy was what? Didn't move forward. Guess why he didn't move forward? Guy wasn't gettable. This guy wasn't gettable. He was argumentative. He was always defending all of his. But dude, whose fault is it that this guy's not moving forward? It's not the client's fault. It's his fault, exactly. So here we go.
Okay, now in terms of what Dane Rouse
back up here again. Just these little ticks again can kill you.
You said no. They're managing.
Redid it as a fixed 4.49% loan.
Okay.
Yeah, Glenn, that's what I want to point out. Did you hear that? Glenn said, "I love the size." Jeez, did you hear his sigh, guys? I'm gonna play it again. This is horrible. And again, okay, you all heard it then. You need to tape your meetings. I don't care if you don't send them in to me. Play them for yourself and catch yourself. Make sure you catch yourself if you're doing these things. And again, this guy swore up and down that he wasn't doing these things. Even when I played him the tape, he swore he didn't until I basically played it back for him 5 times. So we have, just like the client is defensive, as an advisor, I'm defensive too. I'm going to defend what I'm doing. I'm going to say I'm not doing those things wrong. But the tapes don't lie. So I cannot stress how much you can get out of it, and how big a difference your income will change if you start taping your meetings.
Okay, now in terms of what Dane Roush is doing for you, I mean, I asked you, do you have a financial advisor? You said no. They're managing your instructions, how to manage this.
Pretty much, yeah.
They hire these third-party managers. In terms of having a quarterback making decisions, I mean, it sounds like you're a do-it-yourselfer in that regard. You know how to do all this stuff.
Well, I decided that I have to.
Okay. Okay. Now, regarding taxes, you said you want to pay less taxes. Do you have a tax return by any chance?
Yeah, there's one here somewhere.
Okay, a quick peek. This is all in the neighborhood. Let me just get see what I can bring to the table for you. Short-term losses.
I had lots of losses there.
Dividends. So a lot of what you have.
Did you hear that, guys? What did he say? What's the first thing he says when he looks at the tax return? Okay. Losses. Have lots of losses. And so then the guy immediately has to what? Defend himself. But the advisor, what's the advisor think he's doing? Well, I'm creating a crack in this guy's relationship with Dane Roush. I'm making sure he understands all the things that are going wrong, and that, of course, if he knows things are going wrong, he's going to work with me. Is that the case, guys? No. So here we go.
These dividends are coming from the non-qualified monies. How much do you have in what I don't understand is how much is in IRAs and how much is not in IRAs, just off the top of your head. Is it half and half?
On your file.
Which one? I'm just a little confused.
The one that you were in there a little while ago, I think it was the
current. No.
Yeah, no.
Well, yeah, but that's just for yours. I'm wondering what Dane Roush has got $1 million.
Yeah.
Can you hear just argument after argument after argument this guy's doing here?
Oh, sorry.
Here?
Yeah. Oh, it's the one. Yeah, we had it over a while. I can't see what that.
I know. As we get older, it's like.
Yeah. Well, see, I normally don't wear my glasses. I can't see.
Okay, so these are So this is yours.
Yeah.
Okay, good. So we've got this 135 is not qualified.
Right.
And then.
Right. And then the annuity
37
is not qualified.
So he asks him how much of this is qualified and not qualified. The guy doesn't say he knows, so now guess what the advisor's showing him? Yeah, the guy the advisor's walking him through how much is in qualified. You know what I feel like when somebody asks me a question, and then when I say I don't know, they tell me the answer to the question? I'm like, why the F did you ask me the question in the first place if you already knew the answer? Now, do I do that if I'm with a salesperson? Do I do that in the tone of voice out loud? No. But what's going on in my brain? The salesperson has no clue what I'm thinking, but I'm thinking, what the F did you even ask me for if you already knew the answer to the question? That's going on in my brain. I'm not saying it out loud, but if I'm doing that in my brain, what's the chance of me moving forward as a salesperson? Zippo. There we go.
Right, but you're not taking, but that's another different tax strategy there. Here you have an IRA.
Yeah, this was
cash.
This was the rollover from the VIP.
Okay, but so all you have is 135. Maybe Bunny had it. Let's see.
Yeah, she's got some.
This is. Oh, I don't have. That's what there's both over here. Yeah. Oh, Bunny. Okay, 370. Okay, this 377 is not qualified. This
yeah.
is non-qualified. This is
yeah.
qualified. Okay, so we got 377. That helps me a lot. Non-qualified. I mean, I have to look at this more thoroughly, but I just want to see.
Yeah, plus mine.
I mean, I'm going to have questions down there. Okay, and then we got 135. Right, so we're looking at over $500,000 here is non-qualified, and then you've got you're taking money out of there, so you're taking 14,000. I just want to get a picture here. Now your Social Security, so you are taking Social Security. Social Security benefits. When did you start your Social Security?
Just this year.
Oh, okay, so it's not on here. Okay.
Well, see, I started it when I was in 2007. I started it.
And then you stopped.
I stopped and paid it back.
Right.
And I went back to work.
You're smart.
And I started again this year.
Very good. Okay, so you're going to start this. Now, you know how that works? How taxation is going to work on that?
Actually, I don't know what you mean exactly.
You're going to be taxed on Social
I know
Security.
that. Yeah.
Do you know how much?
No.
What's the tone of voice of the client at this point? Weary. I think that's good. Weary and wary. So, yeah. So what, if you sense that a client's getting this way, what do you need to do? Get on their side, or exactly. Get on their side, or, I mean, even address, get on his side quick. Back it down, exactly. So we all make mistakes. I mean, I make mistakes all the time. So, but you have to be listening to how it's being, what you're talking about is being received. And it's obviously this guy is getting weary and wary with everything that's being said. He's getting more and more defensive and actually a little bit snappy back to the guy. So you need to back it off and get on their side.
Okay. It looks like to me, with your income at $53,000 plus half of your Social Security, which is going to be about $12,000, you're going to be over the threshold. You're going to be the 85% of your Social Security to be taxed.
Okay.
I don't know if you know that or not.
I didn't know. I wasn't aware of how much it was going to be.
Yeah. Well, I mean, there's certain thresholds where you're single or married. If you're over $40,000, the rules change every day. So I'm not an expert on the taxation levels, but if you're over $40,000, including half of your
teaching again, yep. And when you start throwing all these numbers at people, Glenn, you're exactly right. This should all be done at another meeting. All he's doing now is confusing the guy because we're throwing all these numbers out. The guy's at this point, I don't know what you're talking about with all this taxes stuff. We do this every day. He doesn't. So this guy, the advisor's off the top of the said, yeah, you're over 40,000, your threshold, you're 85%, blah, blah, blah. You know what goes on in people's heads? I know what goes on in my head when people start throwing numbers. It just completely grays over. Is the advisor moving the process forward to making them hate their current guy at this point at all? Nope. So instead, what he's done is made the likelihood of the next meeting where he can methodically go through step by step, starting out with the easy stuff like survivor's guides and things that they're not going to argue with, and move into beneficiaries and move until he finally gets to the money. And again, when I go out on a date with a girl, if the only thing I talk about is sex, what does she know about me? So what is the only thing that this advisor has been talking about? Money, 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 money. So guess what the guy thinks the advisor's interest in him all centers around? Money. That's why at the disclosure meeting even, what do we spend the first 40 minutes talking about? At the disclosure meeting, non-financial, exactly. So that when we finally get to the financial, does our client think that the only thing we're worried about is money? No. If we spend 40 minutes talking about all the non-financial, by the time we get to the money, they look at us as a consultant, not as a money-grubbing salesperson. But at this point, what does this advisor sound like? Loud and clear. I want to separate you from your current relationship so I can manage your money. I want your money. Right, Eric? I want your money. That's all I've been hearing, loud and clear from that advisor. But when I talk to the advisor, he says, no, 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 Mike, I was just trying to what? Help.
Social Security, they tax your Social Security monies.
Yeah, I know.
50 or 85%. You'll probably be at the 85%. Now, there are ways we can, you know, there are things we can possibly do on that for sure. Rental, okay, those kinds of things. Do you have your real estate in the corporation, or is it?
No, I don't. I thought about doing an LLC or something. Well, I didn't know if that was the best idea, or just having the umbrella coverage was a better idea, or, you know, so I got umbrella coverage anyhow, but.
Right. Okay. I mean, that's things we can look at down the road, whether it's needed or not. Here's the thing.
Again, we're now 11 minutes into this. Has there been one iota, one phrase, one word of getting on this guy's side? This is a first date, right? This is a first date. When you're on a first date, what do you have to go overboard on? Do you want to be snarky? Do you want to point out that she spilled the wine on the tablecloth? Do you want to point out that she chews with her mouth open? Do you want to or do you want to constantly be complimenting your date? You need to be cordial and accommodating. Exactly right. You need to be nice. You need to make the other person feel good. And at this point, has he made this person feel good once? Not even once, guys. This is a first date. We're supposed to be gathering information and patting them on the back. And there are places in there we have already structured to get them to want to go to the next meeting, but we're not supposed to be attacking everything they have at this meeting.
In terms of what I see here, you know, I think you've done a great job. I mean, you're not hurting. You've got good assets. You've got you know, you've got advisors, which are, you know, it sounds like the relationship has changed over a period of time.
Yeah.
At last, exactly, Glenn. Finally, he said some nice things, but but are these things about the person itself or his person's situation? The situation, and here's the difference in that. So I agree, Glenn. At last, he's said some nice things, but it's about the guy's situation. He's missed all these opportunities to pat the guy in the back about his beliefs, and people really respond when you pat them on their back for their beliefs, and he has done none of that. But yeah, at least he finally said some kind words. You're right.
Yeah, because I didn't like their advice too much. So I mean, I've had other brokers. Mm-hmm. One I really liked, but he was fired.
Right.
The guy that fired him took over my stuff.
Oh, he was fired by them. You fired him. Okay.
Well, that guy drained my accounts.
Right. Nice.
And then I had another guy, and he lost all my money, all my. I used to have $110,000 worth of IRAs. I converted them to Roth IRAs. He lost all the money. We got down to $30,000, and then I paid taxes on the rest, so I lost 100% of the money out of the Roth IRAs I used to have.
Right.
So I wasn't real happy with that guy either. So.
Well, okay. Now going back to this. No, this is great information. When you answer these questions for me, I want to make sure I just want to review these, and I want you to.
Okay. So now you see the slide on the presentation that I have. It says, "Don't ask questions you don't know the answer to." So now watch what happens here.
Tell me now, okay, how would you score? You know, you told me what's important to you. You want more money. You know, how would you score Dane Rauscher in these particular areas overall?
Well, see, right this minute, I don't know because these investments are new.
Okay.
Has this advisor set himself up for failure here, guys? Because you know what? In the advisor's mind, he thinks he's laid down a very well-designed case on why he should leave their advisor? Do you see that the advisor in his mind is thinking, I've laid down a very good case here of all the fees and the taxes and blah, blah, blah. In the advisor's mind, he thinks he's laid down a fantastic case on why the guy should hate the advisor. Do you guys think that he laid down a fantastic case on why the guy should hate his advisor? Has the client even once acknowledged that he should hate his advisor? No. But then he goes out and throws out that answer or that question, and you know he's going to get killed on it.
But I haven't.
How long have you been with Dane Rashford?
Oh, didn't give me the right answer, so now guess what I'm going to do? I'm going to go back here, just 10 seconds or so. So I didn't get the right answer, so now guess what I'm going to do? I'm going to argue with you.
I just want to review these, and I wanted you to tell me now, how would you score, these are, you told me what's important to you. You want more money, how would you score Dane Rauscher in these particular areas overall?
Well, so you're right this minute. I don't know because these investments are new.
Okay, but
I haven't.
How long have you been with Dane Rauscher?
15 years.
15
more. Maybe more.
Okay. How much fees have you think you paid them?
Oh, what?
So what he's doing is the classic, I'm going to box you in the corner and make you give you the answer that I want. When you box a person into a corner, when you box a wild animal into a corner, what's going to happen? They may give you the right answer, but as soon as you turn your head, what are they going to do? And so he thinks he's using wonderful logic to get this guy to understand. No, he's using wonderful logic to back a guy into a corner. There's a huge difference between understanding and backing a guy into a corner. So, and yeah, we've got lots of great comments here. Give the guy a chance to answer the questions. Yes, absolutely. Get on the guy's side when he says something. This is classic, though. Jeff Freeberg, is this? Now, this is a pretty loud and clear example, Jeff. But do we see examples of this every time, or hear examples of this every time we listen to a tape?
Yeah, I would say it's the biggest mistake that guys who maybe, I don't know what to call it, new to the system make. They try and they think that the reason that the client's going to go forward is if they don't like their guy. And so they try and get the guy to not like their guy right out of the gate, but it always backfires.
Well, and I'm going to say, just because how long I've been in the business and all the people I've talked to, it's not somebody who's new to the system. It's classic of any advisor, because the 8 years I was in the business making $50,000 a year, guess how I conducted myself? Almost exactly the same way. I thought, if I can show these people all the things they're doing wrong, duh! They're of course going to leave their guy and come with me. And did I want to wait till a second meeting to do that, or did I want to show it to them as soon as I saw it? As soon as I saw something wrong on their statement, guess when I wanted to talk about that? Now, right now I'm going to tell them that. And the more things I could find, and the sooner I could find them, the more they were more likely to work with me. And did they? Heck no. It's always, yeah, I agree, Eric. We all want to show how smart we are, and that does not work. There we go.
I mean, their specific fees were 1%. So yeah, 1% of.
Well, now with the funds, let's add it all up.
Well, if I add it all up, yeah, you're probably
3%,
talking 3 or 4%. Yeah.
On how much? On $1.1 million, roughly?
So now, guess what we're going to do? Can you see where this guy's going? He's got the guy to admit enthusiastically, or in a pissed-off way, or in a defeated way that he's paying 3 or 4%. Defeated way. So now, guess what I'm going to do? I'll need to beat him up some more. That's what I'm going to make. So now that he said 3 or 4%, I'm going to go through the math and make sure he knows how much money how stupid he actually is.
Well, if I go back to 1997, I think is when I started with him. The average that was in there was probably, we saved a lot there for a while. The average was probably 500,000 over that period of time.
Okay.
I mean,
so 3% of 500,000 is how much?
per year.
Yeah. How much is that? We know what that is.
$1,500.
3% of 500,000?
Yeah.
Let's add a zero onto that.
I can't even listen to it anymore.
15,000.
How
many years?
condescending was that, guys? What's 3% of $500,000? $1,500. Really? Let's add a zero onto that. It's brutal. I agree. It's brutal. So here's the point, guys. I would have no problem having that conversation about walking the client through the math, but when would I do that? When do you think I would do that? At the disclosure meeting, because here's the thing. At the disclosure meeting, I spend the first 7 or 8 items are non-financial, and it gets the people, because when they come into the meeting, do they think that their guy's an okay guy? Yes, they do. In fact, many of them think their guy walks on water. So the first 7 or 8 items I talk about, the non-financial things, it gets them to think, oh, wow, my guy doesn't walk on water. There are some things that he missed. I'm kind of disappointed that he missed those things. Are they going to be angry and want to leave their guy because he didn't give them a survivor's guide or didn't talk about umbrella liability insurance? No, but will they be awakened to the fact that maybe their guy's not quite as good as they thought that he was? So it's putting the frog into the water, and I'm turning up the heat. And then we get into things where they think, I'm a little irritated that guy didn't cover those things. But I'm not going to go for the throat and go through the math until they feel what about their guy? I'm not going to use the math to get them mad at their guy. I'm not going to go through the math until they already are mad at their guy. Then I'll go through the math, because then when they go through the math, it doesn't make them look stupid. It makes them feel what? If you go through the math before they're mad at their guy, it makes them feel stupid. Can we agree with that? But if you go through the math after they're already angry at their guy, now where do they put all of that energy? Into thinking themselves that are stupid, or that, yes, exactly, that they were taken advantage of, and that guy's an SOB. Same conversation. It's all timing. It's all timing. Do you get that? And the first meeting is not the time to be doing these things. Okay? So, great comments, guys. Thanks for all the feedback. You get it. You get it when you're listening to it. Now, how are you going to make sure that you're not doing it? There's only one way to do that. How do you make sure you're not doing this stuff, even a little bit, in your own practices? Taping the meetings. And I don't care if you send them to me or not, just tape the meetings, okay? And you'd be surprised on what you'll hear in there. I went from $50,000 a year to almost $1 million in 3 years, and the one thing that can be traced back to the difference that I was doing was taping those meetings. And I wanted to throw up because my meeting sounded not too awfully different from this guy's meeting. I was constantly teaching, preaching, telling, and selling, and I thought I was actually, quote unquote, helping the client, but instead I was just getting them irritated with me. Okay? So that's what I got to cover today, so I appreciate you being on the call. Welcome back. If you've got questions, concerns, make sure you get a hold of us. I mean, do you guys like these tape reviews if we do them a couple times a month? Or are they just beating the dead horse? Excellent.
Lots of positive.
Roger Radcliffe said, great. And I appreciate that feedback. And then Roger said that he's actually using the CD cards I talked about here before we went on Christmas break. He is using the CD or the 4% FDIC insured in his particular state cards that I gave you guys at one of the pointers here in December. He got it through the BD. It's all printed, and he's going to send them out. So he'll keeps up to date how things are going with him on that. So I appreciate that. So super. I appreciate all you guys. I hope you have a great rest of the week, and then we will talk to you next Monday. Thanks, everybody.
Thanks.